Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had 2 directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Checking in on oil, still within the channel that we drew yesterday with the clear $54 resistance and support the low of this recent pullback, $52.74. So we're closer to breaking support than we are to resistance. We've got the inventory report tomorrow at 10:30 a.m. Eastern to be keeping an eye on. And that's either going to be a catalyst to head back to 54, or it's going to send us to lower lows by breaking the support. So it's going to be a pretty important inventory report to be keeping an eye on. And there is a potential of this neckline being broken with this little head and shoulders bearish reversal pattern where we do have key support at those levels. And if they do break, I would be looking down to 52.20 as a potential next support level. But it all depends on that reaction. And looking at the daily time frame for oil, we had that bullish candlestick yesterday, or I should say the bearish candlestick yesterday, pulling back, an attempt at a recovery, but an upper wick today showing profit taking. So the bears do still have a bit of control with that $54 resistance. We have this higher low uptrend to be watching. That's all the way down in the upper $51 range. So we're going to be keeping an eye on this tightening range. And unless we see a break of $54 in reaction to this inventory report, we're likely going to stay within this tightening range. We just might head down to test this uptrend support line yet again. So again, I keep giving my sentiment where I am bullish on oil longer term on the weekly time frame, with the bulls continually buying the dip for the past few months with all these lower wicks. We just need that follow through to the upside over $54, and we'll see if we get a bullish catalyst in the inventory report. Looking at USO, higher open today, a gap up open that saw profit taking. And look at the pattern here. All these black candlesticks on the daily time frame are showing when we had a higher open and then the close was the bottom of the real body of the candlestick, and it was still higher than the previous day. So you can't put a red candlestick because it would show that we had a lower close than the previous day. So they're black to show that while we had a green close, the open was the high of the real body and the close was the low. So you can see time and time again, very often in the past month, a higher open has led to profit taking on USO. So that's a pattern to definitely recognize and utilize, where selling at the open is potentially a good idea on oil a lot of the time recently. So we have that clear 1163, 1162 top, and support right now is 1130 and then 1104. Looking at the weekly time frame, the middle Bollinger Band support is 1119, still holding that level, and we have this wall of resistance. Look at the highs of the past 5 weeks, 1163, 62, 58, 62, 57, so all right in that range, and that is lining up with that $54 psychological resistance on oil. So if we don't get a break this week, pretty much every week that goes by that we don't get a break at this point between the daily higher low pattern and the clear $54 resistance, every week that goes by that we don't get a break means a break is more and more imminent. So if we don't get a break this week, we know next week it's significantly more likely that we're going to get a break. And if we don't get a break by next week, I would be very certain that we would get a break at the end of February before we head into March. So going to be watching this tightening range. Tomorrow's a pretty important day for the short term. We'll check back in after that inventory report. I appreciate you watching. Have a great night.